Hey guys, Killstokes here. Welcome back to another Weekend Trading Edge video. My apologies for being late, but I spent time with family this weekend, and family always comes first. I hope you guys can understand that. But with that being said, I did want to give you guys a video because there are a few opportunities that I want to share with you. Now, there's a lot going on in the news. We have the war, US and Iran, that's still going on. We have the White House correspondent dinner shooting that happened. We have Trump being interviewed on 60 Minutes, all of which is going to affect the market. But I want to start here on the pound yen because the yen has been in the news for different reasons. So to make this as quick and brief as possible, the Bank of Japan has an interest rate decision coming out on Monday or Tuesday, depending on where you live. Interest rates are the main gear, the main movers of the market, so this is important. Now, for the longest time, they were expected to hike their interest rates, but because of the war and the uncertainty that comes with that, the expectation is now that they're going to hold. Now, the yen doesn't like this, or the Bank of Japan doesn't like this, because they want to have a stronger yen. They are worried about the yen being too weak. They've even come out and have done the whole verbal intervention thing again, saying we are going to intervene if it gets above this level, trying to get people to back the yen. So with that being said, in order to get the market to buy into that idea, they're going to have to release a very hawkish statement. So a statement that is very pro interest rate hike. If that does not come out, or if the market doesn't buy what they're saying, I would expect more yen weakness. And that's what we see setting up here. So I'm going to be on the pound yen here. We're going to start on the daily chart. And you can see that price has been in a bullish trend for pretty much the last year and a half. And we've put in this interesting level of consolidation at the top. So if I take out my horizontal line tool and I look at our most recent structure high, you can see that price gave us a higher high, higher close. We then pulled back into our previous level of structure, and now we are retesting the highs. Now, we haven't broken and closed above those highs. That is going to be the confirmation that we would need, and that me personally, that I would want to wait for before looking to get long here. But you can see that the market had a really tough time fighting back that pullback, meaning that as the market pulled back, the bears couldn't really gain any distance on the way down, and the bulls protected this level pretty well. So when I see this, I'm expecting a continuation higher. So identifying that this formation is forming and making the prediction that, hey, we may see a continuation, especially if we can get a higher high, higher close. The next question that I want to ask myself is, Akil, if we were to continue higher, where are we likely to continue higher to? And as we go to the weekly, we've got to go back a very long time, right? You can see that we are holding a previous level of structure from back here in 2008. And honestly, the next level of structure that gives us any relevance is going to be the 220 level at minimum. So we won't even worry about the larger level, but let's just look at this 220 level at minimum, right? It doesn't look like a lot on your screen right here on the daily. Those lines look pretty close, but if we go, or on your weekly, excuse me. But if we go down to our daily and we look at things in a different perspective, yeah, there's a lot of room here, right? We're currently trading at about 216 and this is 220. There's almost 500 pips of potential profit. Potential? How many times can I say potential? There's almost 500 pips of potential profit there. There we go. Or profit potential, however you want to say it. So this is something I'm certainly looking at in the future, where if we can get a break and close above a violation of this level, then me personally, I'll look for a pullback similar to what we did right here, and then an opportunity to trade it up. And of course, from a smaller perspective, right, it's just not one opportunity, meaning if you miss it the first time, you never have a chance ever. Usually markets just don't go straight up. They tend to ebb and flow. So each time we get one of these ebbs or these flows, these are opportunities to get involved until we reach our ultimate destination. So keep an eye on pound yen for that big bullish breakout. Next, we're going to head over to the euro yen, and this is going to be different but similar. So I'm actually looking for shorts here on the euro yen. But before you get crazy and say, how could you be looking for longs on one pair but shorts on the other pair? I am expecting the market to go long before those potential shorts can happen. So what we have here is a potential advanced pattern formation, right? This is going to be our starting point. We call this our X leg. And our initial move, our swing high to swing low, this is going to be called our X to our A. I then want to bring my Fibonacci retracement out from the high of that X leg to the low of my A leg, and I want to see which Fibonacci level this B leg, this retracement, comes to. You can see that it comes to a 618, which puts me on alert for a Gartley pattern. And the way I trade Gartleys, at least, I'm expecting a decompletion at our 127 extension right here. So this is the zone in which I'm looking for a bearish Gartley. So this would be a short opportunity. Let me just draw this out for you so it looks nice and tidy. X to A to B, B to C, C to D right here. And now you're saying to yourself, well, Akil, you just said that if the yen doesn't come out as hawkish as the market wants it to, we can see more yen weakness. That would mean on this chart, being the euro yen, that price would go up. Well, that's exactly what we need to complete this pattern. We need price to move up from our current location of 186.70 all the way up to about 187.70, so 100 pips, right? Now, with these advanced pattern formations, we're not looking for, full reversals in trends. We're just looking for a little bit of a retracement. So, for example, the initial target for this pattern would be right here at about 187.13. So all I would be looking for is for price action to come to this level and then just retrace right back down into this level. And that is certainly something that could naturally happen. Remember, with the pound yen example, we talked about the market moves in ebbs and flows. I don't expect it to go 500 pips straight up. I would expect it to go here and then here and then here and then here and then here to get to its ultimate destination. I hope I have like a finish line thing. I'm wasting time, I know, but I like these little graphics. They're fun to put on there. Do I have a finish line, finish line, finish line? No, Akil, somewhere. I know I gotta have one. There we go. The finish line right here. Well, as a trend continuation trader, you're looking to get involved in longs at all of these pullbacks. So these would be opportunities to buy, insert in sync Dancy thing. As a counter trend trader, you're looking for the exhaustion point. So you're looking for the area of exhaustion before those pullbacks. So you're looking to sell. And I think the big thing about trading is you think you got to be on one side or the other, and that it's counter trend traders versus trend continuation traders. It's always bulls versus bears. They actually can work pretty good together. And not to get on a whole rant about this, but I was explaining to a friend of mine about trading the other day. He was asking me how am I trading these markets or investing in these markets. I said, investing wise, it's been a little bit interesting, but from a trader's perspective, it doesn't really matter because I go long, I go short. I don't really care what the market is doing. I'm just looking for opportunities to get involved. So this is a good example of how a bullish move can lead to a bearish opportunity. And you can certainly take advantage of that bearish opportunity, even if you think a bullish move may happen next. You're welcome. Next, we're going to be on the dollar Canada, and this is an interesting situation. Now, you remember us talking about this last week or 2 weeks ago. We've done a few things here. So, one, we've come off this ascending triangle. It's a little bit of a backwards ascending triangle because usually you see this in the opposite direction, but we've had this ascending triangle here where we have equal highs and we have higher lows, and as expected, we broke out to the upside. Now, what I would have loved to see here is a violation of these highs. If we could violate those highs, that would give me a clear directional bias, at least short term here on the dollar Canada. We don't. So this is still a little bit, you don't have the confirmation, but I know all of you guys don't need it. So what we've done after that is we've retraced back down into this consolidation zone, the ascending triangle, and we've done two things here. One, we've put in something I call a structure swap or a RSI swap. Structure swap is a different thing, but where we've had our RSI, our relative strength index, our momentum indicator, go from extremely overbought directly to extremely oversold. And then we've also put in something called hidden divergence, right? When you look at these two lows, this low and this low, typically what you want to see is this, right? So you see how this low is here and this low is higher and the RSI is here and this low is higher. It's all working together. But when you look at this low, it's higher. When you look at this low, it's lower. That is something called hidden divergence, which is a positive sign for trend continuation traders. So in this case, it would be a positive sign for the bulls. So what one could look for here is a move back to the upside. But the question is, how can you get involved? Well, two things here. On the daily, you can look for a double bottom, right? We have one bottom right here. RSI is oversold. If we get another bottom down here, we can have a double bottom equipped with regular divergence. Not even going to go over that since I just confused you with hidden divergence, but it would be another tool for a bullish opportunity. And if we go down one time frame lower to the 4-hour chart, we actually have a nice little head and shoulders pattern that is formed as well. If I find my little deal here, yep, there we go. We have a left shoulder, our bounce, our head, our bounce, and our right shoulder forming right here. A head and shoulders pattern is a classic reversal pattern as well. And this would be a bullish one, which would put us in alignment with our bullish trading opportunity. Now, before you go, make sure you go back and watch the last video I did as a Trading Coach Podcast episode called Trading Small, Smart Strategy or Silent Killer. It's a great conversation we had about, is trading a small position size hurting or helping your trading? And I would love if you guys contribute to the conversation. And also, we're getting a lot of questions about trading computers. As always, I know nothing about trading computers, but here is a free guide that you can use where you can learn everything about trading computers and what you should have, what you don't need, and all that fun stuff, whether you're looking to buy one or build one on your own. So yeah, whenever you guys ask me questions, I just forward you to the experts because I don't believe in talking about stuff that I don't have an expertise in. So anyway, back to playing with my kids. I hope you guys have a great weekend. And until next time, plan your trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.